Yo, what's going on, people? All right, so earlier last week, Elon Musk goes and buys Twitter for $44 billion. And obviously, Elon Musk's net worth is over, I think, $200 billion, however much it is. But that doesn't necessarily mean that he bought Twitter for $44 billion with cash out of his own pocket. Important to understand the intricacies of this deal, which we're going to talk about. But the main bank that kind of led the transaction or the acquisition was Morgan Stanley, American investment bank. I'm sure all of you or most of you have heard of them. Goldman's was involved as well as a few other banks. Now, just as you and I might go to a bank to get a mortgage if we want to buy a house, or we might take out a high interest loan if we want to finance a car, for example, Elon decided to go to the investment bank Morgan Stanley, as well as others, in order to raise around half of the $44 billion. And we'll talk about why in a second. This video is kind of a different type of video. It's a bit more topical. It's a bit more focused on like current affairs and news. Let me know if you want me to do more videos like this on the channel. If this isn't your thing, just skip this video and then watch a different video on the channel. Initially, Elon Musk bought around 9% of Twitter, and then he reached out to bankers at Morgan Stanley and then later on Goldman Sachs and kind of said to them or expressed some interest that he might be interested in taking over or buying Twitter. And obviously, investment bankers at Morgan Stanley and Goldman Sachs, the minute they hear someone like Elon Musk, the world's richest person, interested in buying a technology behemoth that is Twitter, immediately they're going to see dollar signs, right? They think this is going to be a huge deal. We can make a killing, get lots of fees off of this. You know, this is a massive transaction. So there's a lot of money to be made. And so obviously they're not going to shy away from it. One of the reasons that they might shy away from it though, was that the way Elon Musk was approaching it was kind of like, it had the vibe or the feel of it being a hostile takeover. And oftentimes, so a hostile takeover, for those of you that don't know, is when a company or an individual wants to take over a company where that company is not interested in being taken over. And so it's going to be a hostile takeover, right? Not in the interest of the company being acquired. And so some banks, some companies don't want to be involved in hostile takeovers because it might be unethical. It might disrupt existing relationships with other clients. So for example, if Morgan Stanley or Goldman were involved in a hostile takeover of Twitter, that might, you know, impact negatively existing relationships between Goldman and Twitter's board or other clients that might be related to Twitter or other social or tech companies that are similar to Twitter. They might be like, why are you guys helping this hostile takeover take place when it's kind of against the interests of our company, what have you. So there's lots of different reasons that you don't want to be involved in a hostile takeover. And so the investment banks had to be careful on how they went about going ahead with Elon's proposal to take over Twitter. Morgan Stanley already had an existing relationship with Elon Musk. They were probably serving him on the private banking side, managing his wealth, assets, portfolio, whatever it might be. All right, so there's 12 banks involved in the loan. They're going to give Elon Musk $12.5 billion, and the largest portion of that comes from Morgan Stanley. Now, it's uncommon for them to give such a huge loan or, you know, do a transaction of such size. But this is Elon Musk, richest person in the world, and they've already had an existing relationship with him. And I think the terms are probably in their favor. Obviously, they're going to make big bucks from it. These people are smart. They know what they're doing. And so if anything, Elon Musk is probably taking the most risk here. If he defaults or if the whole thing goes bad, he's probably got a lot more to lose. He's put up a lot of Tesla stock as collateral, meaning if he can't pay back the loan to Morgan Stanley and the other investment banks, they get a shed load of Tesla stock from him. Investment banks have different divisions, right? If you're working in the private bank, you might have a relationship with a high net worth individual who might be an entrepreneur or the CEO or the founder of a very big company. And so you might chat to them and be like, yo, you should get in touch with our investment banking division. They can help you acquire this company or they can help you merge, blah, blah, blah. And so the different divisions of investment banks oftentimes might work together in order to generate revenues across the different divisions. All right, so important distinction. He's taking out two types of loans. The first of which is around the $12.5 billion margin loan. So what that means is he's getting 12 or so banks to compile together 12 or so billion dollars, 2 billion from Morgan Stanley and then smaller sums from the other banks. They're putting that together and giving that to him. However, that's backed by, or that's kind of collateralized by Tesla stock. So, you know, if he struggles to pay that back, they get the Tesla stock. So that's the collateral there. And then he's also financing $13 billion in debt financing. That's also led by Morgan Stanley. And that's like a traditional loan where he needs to pay interest on it. And then the remaining $21 billion or so is going to be paid through Elon's own personal cash and net worth. A week or two ago, he sold $8.5 billion in Tesla stock. So he got that cash, and that's going towards that $21 billion. So in total, it's around $12.5 billion in the syndicated loan that's collateralized by Tesla stock. It's about $13 billion in debt financing. So that's about $25 billion. And then 21 or so billion dollars in cash. So around $44 billion in total. One of the most interesting things about this deal was the fact that it was super quick. It happened very fast. Oftentimes, big acquisitions or mergers can take 3 months, 6 months, a year plus. And so this one, they moved quick because money talks, right? End of the day, this was a $44 billion deal. It was Elon Musk. There's lots of future business to be won there. And so everyone kind of wanted a piece of the pie. Lots of fees, lots of earning potential to make on the back of this deal. And so the investment banks kind of prioritized it. And yeah, it's like front page news. It's a big deal. It's something, if you work in the M&A division, it's something you can shout about. People kind of recognize you for it. I'm guessing people go into investment banking to work on these types of deals, front page news, etc. Personally, doesn't really appeal to me. It's like, okay, cool, you worked on this. I'd rather be Elon Musk, right? But end of the day, yeah, interesting stuff if that's kind of up your street. More than anything, it's a good example of how relationships can span across the business spectrum or the divisional spectrum of an investment bank. So you might have a relationship in the private bank or in asset management, and then you can put them in touch with the investment bankers and then make things happen. But it does get heated, don't get me wrong. People, when there's large sums of money involved, lots of bonuses involved, lots of, potential promotions or whatever it might be involved, people can backstab each other. People want a bigger cut of the pie. People get greedy. And so oftentimes if you recommend big business to someone, you want to be paid back, right? If you aren't paid back, that's going to lead to politics and all that stuff. But when you enter the world of work, you will see that for yourself. So I won't say much about that here. Also, don't forget, Elon Musk isn't just about Twitter and Tesla. This guy has SpaceX. He's got the Boring Company. This guy is, the founder of lots of big companies doing big things. And so you would love to be an investment bank or an investment banker at the forefront of that relationship, because essentially working on future deals with Elon Musk is going to make you rich, wealthy, is going to do a lot for your career, and also for an investment bank that works on these deals. And so, it's a very lucrative or interesting position to be in that a lot of banks and bankers will want to be in. And so that's why they kind of, Morgan Stanley, for example, are, going all guns out, offering him everything, arm and a leg, big loans that they haven't done before, because there's big business to be made and there's lots of money to be made from Elon and his business ventures. And if you're a banker working on these deals, you're going to work your socks off as a junior, but that's why they get huge bonuses, a lot of business, a lot of money, a lot of revenue to be made. And that's why, junior bankers work super long hours, because these things don't happen easily. They take a lot of time. Hence, they're paid a huge bonus at the end of the year. However, they do get burnt out 9 times out of 10. If you enjoyed this, let's call it a topical video, news video, I don't know, different style of video on current affairs, let me know in the comments down below. Leave a like and let me know if these videos are useful for you. And I will see you in the next one. Peace.